It's a great question. It's one that comes up a lot, and I think we live in a world that is increasingly rich with data. Data has in itself become something of a new currency, in fact, and the ability to generate and consume data in new ways and in new innovative ways, I think we see growing significantly, and I think that will only escalate. But we do see some really interesting and exciting developments in this space. But the challenge for clients and for end users is knowing really how to put that data to work, and in understanding which are the key sustainability risks that they need to act on to reduce their exposures in their portfolios. Now, in essence, it's really about looking through the massive data and understanding what are the material factors that they need to be considering when they're making asset allocation and investment decisions. And I think that does, in some respects, become harder to navigate as the availability of data grows. So the question, I think, is to bear in mind here that there isn't sort of a one-size-fits-all approach. And if we think about ESG as having the ability to generate insights that can then lead to alpha and to outperformance, the way that every investor approaches this is going to be different and should in many ways be different. But you also have, I think, a spectrum of investors with a different level of understanding and knowledge about ESG. So in that sense, whether you're looking at ESG scores or you're looking at the underlying raw data, I think there's really something in the mix for the whole range of sort of different levels of understanding, knowledge, focus in terms of the issues that people think are material and that they want to use either to reduce their risk exposures or to act on as a driver for investment because they see opportunity in specific sectors, perhaps as we transition to a low carbon environment. So if you're looking at sort of ESG data from that perspective, I think the most important thing to think about here is really, transparency, frankly. How much can you look through the data and understand what the sources are? What are the issues that that the data gives you insight to? So, for example, if you think about companies needing to prepare for a higher price of carbon, or thinking about industries that are going to have to transition their business models, because we're already seeing the impact of higher cost of lending from banks as they think more about integrating sustainability into their lending decisions, for example. So it's really which are the data sets that are going to help you to achieve the aim and the end goal. But aside from that, I would say also it's really about understanding the methodology that different providers have. So really looking under the bonnet and understanding what's going to be most useful for you in your particular approach to integrating ESG into your investment decision making. But that transparency element, I think, is really key, particularly as we see new data sets come on board that may not be derived from company disclosures, but might be looking at things like big data or alternative data sources or the use of artificial intelligence.